Okay, welcome. Weekly Roundup, Hart Investment Group. I'm Scott. That's Ben. End of another big week. End of a month.
And year.
And fiscal year at the bank.
And fiscal year for the financial institutions.
Okay, let's call it that.
Yes, the banks, all the banks.
Yeah, all the banks, etc.
Yes.
Cool. So it was a busy week.
Yeah.
When we have the year-end stuff like that, it's a busy week behind the scenes for sure.
Right. Yeah.
What did the markets do? What did the markets do this week, man? Let's get right into it.
Generally finished higher, at least the U.S. markets. Canadian markets are down a little bit today, but for the week, most markets finished higher. It was a big week from the perspective that the Bank of Canada, they surprised the market with saying that they're going to stop QE kind of immediately, and they're probably going to raise rates a lot sooner than they thought, which they'd indicated end of next year. They seem to say early next year, and the market actually priced in the chance that they might actually raise interest rates in January, which I think is ludicrous, but that was a big shock to the market this week.
Gotcha.
That has a big impact on bonds.
I bet.
Yeah.
Okay, what else?
Yeah, so that was, I think, from a what has changed perspective, that would have been the biggest one. You know, we've gone many years, months, quarters where they've been talking kind of stability, forward guidance. Carney kind of started forward guidance in Canada, and then Tiff Macklin had come in with similar view, like forward guidance. And this time it was a bit of a step away from that. And so I think that I'm looking at it and saying, okay, is he doing this because he knows that the economy is slowing next year and inflation is slowing next year? So they want to have some powder dry so they can start cutting rates and stimulating again when the economy slows next year? Or does he actually think that the economy is in good shape? So I would say the first part, I think that they want some dry powder. Canada historically has only really gone against the US a couple of times. And every time that they've gone counter to what the Federal Reserve has done, they've really kind of had to reverse course quite quickly. So, I'm kind of in a wait and see. Let's see what happens. But that 5-year Canada rate had moved quickly. That's, as I mentioned in my dailies, this is going to have a big impact on housing. last time 5-year Canada bond rates were at this level, mortgage rates on the 5-year was somewhere between 60 and 100 basis points higher than where they are today. So you tell me you slap 1% on 5-year mortgage rates, that's not going to have an immediate impact on GDP in Canada and housing. I think you're kidding yourself.
Right.
Yeah.
Exactly.
Yeah.
In business news this week, a couple big things happened, right? Facebook changed their name to Meta.
Yep.
Why do you think that's material?
It's huge. If you want to have, if you're willing to go down the rabbit hole and look at it and watch it, you can go to meta.com, and Zuckerberg does a keynote where he kind of shows where he thinks this thing can go to and where he'd like to take it. It is a shocking and potentially scary future if people want to watch this, but pretty material view on that. They're making a massive bet in kind of the metaverse, and the metaverse is really a digital universe, for lack of a better term. And so really it gives you kind of the key insights and around, his view is that the back to work never happens again, and that kind of the walls have come down and everyone's going to create their own office spaces in a digital universe. And so they've obviously made a big investment in VR. So, their view is that, virtual reality is going to be a big part, and AR, like artificial reality. They've got some interesting, divisions within the business, the Spark.AR, and they have like some really interesting view on where they think this is going. On top of that, they're launching their own crypto, which is DM. And so, as I said in the daily today, love it or hate them. I mean, lots of people hate Facebook, but these guys have really been forward looking, and it's interesting, fascinating to watch and see where they want to take this thing. So I think this is really a really material change that they're trying to make right now, and it's worth paying attention to.
For sure. And if you want the layman's view of what that might look like, go and watch the movie Ready Player One. It'll kind of give you like a kind of like a view of what that may look like, right? Where you can buy and sell real estate online, like actual, like online digital plots of land, right? People buy like digital stores, all that stuff in this metaverse. Pretty crazy, but when you think about where the world's at now, it's not that far-fetched, I guess.
Yeah. Sure. Well, I think it is, and I think that where I think last week we talked about the the robots are coming. I think the robots are here and coming, and those are taking away jobs. My kids actually said to me when we talked about this, is they said, well, these are taking people's jobs. I'm like, well, no, we're just evolving, right? You're not going to do those jobs, but there is other places that are evolving. And this digital world is all about community and inputs and, collectively coming up with new ideas and new businesses and new things that you can do. So, I think it's a huge technological advancement, and, jobs are being creative every day in this kind of new world. So, it can be scary, but I think it's an evolution of the employment structure.
For sure.
Yeah.
Well, we kind of went down the rabbit hole on that one, didn't we?
Yeah, well, you brought it up.
I know I did. It was my bad. Okay, so we want to talk about what you got up to in portfolios this week.
Sure. So I think that, as I said, the last couple of weeks we've been talking about, I think we're in kind of that growth reaccelerating. We saw the numbers in September were actually a little bit better than expected in the US. So seeing a little bit of inflation and growth accelerating here. Tech had a good week. Small caps had a pretty good week. So made a few changes, added back to AMLP, which I haven't owned in a while, which is the Energy Limited Partnerships. Bought a little bit of DBB, which is base metals. Again, these are things you'd kind of want to own temporarily. I did reduce exposure in financials yesterday, US Financials, XLF, and KRE. So the one thing that we did see off of the Bank of Canada announcement was we saw a flattening yield curve. And so what that means is, obviously there's two ways it can flatten. The long end can come down or the short end can come up. And in this case, what we saw is the short end come up. And why is this material? It's material because banks borrow on the short end and lend on the long end. So if you got a steep curve, they make a lot of money. On a flat curve, they don't make as much money. So reduced exposure to financials there. I'd say so. Those were the kind of the most material changes that I made this week.
Gotcha.
Yeah.
Okay. Seems like the usual suspects participating today, so you guys know how to ask questions if you need to. What you got a Ben's chart segment for us today?
I do got a little segment here. Again, let's see if we can get these up and running here quickly. So let me get this sorted out. But yeah, I do. Let's go. Let's get this moving here.
While you're setting that up, little known fact for everybody. I'm pointing with scissors here. This is my goalie mask from 1997. True story.
That was back in the good old days.
Back in the good old days when hockey was hockey.
No, it's not the case anymore, right?
I don't know. It's different now. It's different now.
A little bit. Let's see. We're going to show the Thompson screen here briefly, which will give me a chance to get the slides up. So let me know when you can see the slides up there.
Yeah. Looking good.
Slides are up there.
Yep.
All right. We'll get a couple of slides to go through. I want to take a couple of points. One of the things that I think I made this point earlier in my annual view in January this year, talking about really kind of the divergence between the haves and the have-nots. We'll say this is US data. Canadian data looks pretty similar as well. But what this breakdown is the percentage of who owns the financial assets in the world. So if you look at the data here, you'll see the blue line obviously represents the top 1%. And what you can see here is you obviously see an explosion and concentration of assets in the world. So and the red line would represent the bottom 50%. And we've been seeing a straight kind of top left to bottom right for the bottom 50% of the US. And so if we get these political upheavals and people wondered how Trump got in and some of the things he said that got him in, and you're seeing that continued divergence. And if you follow Neil Howe, who's a demographer, who's talked about this, this is really part of his kind of fourth turning narrative, right? Did you get a big spread between that, and you get uprising, and you get some of these radical leaders come in with saying, that the top 1% have too much. How do we balance this out? And so, this is a visual of that. I'm sure everybody knows this, but it's hard to believe it, how stark it is right now in the US.
Wow. Yeah, that's a good one.
Yeah. So another one which doesn't get a ton of press these days, but there's been a lot of focus. If you look under which stocks are winning and which ones are losing, last week we talked about the gold miners, kind of the tech versus gold miners, and so this is a pretty good representation of this. This is kind of the run up to the divergence between growth versus value. So growth would obviously be technology and high growth names versus kind of the valuations perspective. And so when we look at this statistic, you're looking at kind of a potential double top here. And so, it's not a single input to take into account, but it's one of the inputs that you got to think about when you think about valuations. I know nobody wants to hear about it, but when you get to extreme levels like this, there's increasingly concentrated risk at the top, because growth and momentum in these ETFs, these have all kind of culminated into extended valuation. So certainly something important to pay attention to.
Yeah. Great.
The
2 for
last
2
one,
there, Ben.
last one I'll hit you on. This is more of an extension of the previous one. So this is the market cap of Tesla versus the rest of the car companies. I did put something on the daily. It's kind of 50% from a market cap perspective versus 50% the rest. So I met with the portfolio manager who says, this is in the wrong category. It's a technology company, and they're really the leader because they're a technology company. So, interesting. We'll see if that's how it plays out. Certainly, Musk has pitched it that way. And as you can look at this number, they're approaching $1 trillion market cap. And it's hard to say it's justified, but people believe in the story. But it's interesting to look at the stark difference over the last, we'll call it, 2 years, how Tesla's market cap has grown, exploded versus the rest of the companies.
Yep. Didn't they hit $1 trillion this week?
Maybe they did hit $1 trillion. Yeah.
Yeah, they did. Yeah.
Yeah.
They did for sure.
That's the charts of the day.
Man, love the chart section. My favorite one, visual learner.
Yes.
It's good for all us visual learners.
Indeed.
Cool.
Yep.
All right. What else? What do you got coming up this week?
Yeah, so I think it'd be continue to see more of extension, see what happens. Obviously, it's November 1st on Monday, so we're into a new month. October was higher generally in the markets, and I think that surprised some people. I'd expect we continue to see that. The one thing I pay attention to always is just really the severity of the call and put ratio. And we got pretty max long calls, and puts are getting super cheap again. Not something to be immediately worried about, but we had a similar setup in February of 2020 like this. So it's one of the signals I'm watching, and may buy some more puts off into the future, maybe next summer. But right now, I think the market generally wants to creep higher. People are still kind of underweight some sectors, primarily technology. And so I'd expect the market to creep higher, but watching that put call ratio pretty closely.
Gotcha.
Yep.
Awesome. Okay. Any questions? Questions, comments, concerns? Nothing? Okay. Any parting words there, Ben? Anything else you want to touch on?
Not anything too material. I think I've hit a lot of the things there. I think we're into that kind of final phase of the reacceleration, as I've mentioned the last couple of weeks. So I'll continue to watch that pretty closely. The new issuance market in Canada has actually picked up a little bit. So you see some of these private companies starting to rush to market as we approach the end of the year. And they've actually traded pretty crappy, some of these deals that have come out. But a lot of companies look like they're rushing to market right now. So continue to watch that. But, more than anything, let's see how the next couple of weeks play out. And, December sometimes can be quite volatile. Next week, we got the U.S. Central Bank talking about rates and the Bank of Japan. So, maybe they shock the world too and say they're stopping QE. If they do, that'll be a different market. If they don't, I'd expect equities to go higher.
Gotcha.
Yep.
Okay. That was a whirlwind today. Just absolute right to the point. Keep it concise.
You got it.
I like it.
Yep.
Okay, everybody. Well, that's it for today. We'll get that recording up for you either later tonight or first thing tomorrow. And thanks for joining us. We'll see you next week.
Thanks very much. Take care.